Hi, my name is Dion, and this is the Bullion Vault. Hi, Willem, how you doing?
Very well yourself, Dion.
Very good. So it is episode 31, and it's been quite an interesting time over the last couple of weeks. We've seen gold pretty much level out around 3,300, just over dollars an ounce, and it's been quite consistent. Silver peaked a little bit over around 38, and it's dropped a little bit, but staying consistently in the mid 37s.
Yeah, it's actually in the high 37s, 37.77 at this very moment as I'm looking at it.
So yes, the message more importantly is even though the metals seem to be lateral in their growth right now, they poised to probably go up. I mean, I was reading an article by a guy, and he was saying that he does believe that silver could hit $75 by the end of the year. I think it is a bit of a stretch, but I do think we're going to hit the $40 mark. We've said it. And I do believe it's possible. I mean, he also then looked at gold at around $4,000 an ounce. I'll actually post there's a video and I'll post a link to it. David Hunter. He's quite an interesting fellow, and he generally calls a lot of these things, especially with market, when things are happening in the market, the volatility. And there's times where he's actually been spot on. I think 4,000, we've spoken about this before. I think realistically, we're probably looking about 3,500 dollars an ounce come the year end. I think we're going into that season of traditional market crashes, which is the October, Black Wednesday, and so all those happened around October. So again, we are moving into that period of time, and then of course you got the festive season, which has a traditional upswing on precious metals anyway.
Yeah, definitely. I mean, we see in December over the festive season, we generally do see an upswing in the gold and silver prices. And if you really think about it, we're talking $75 an ounce of silver, which I'll admit sounds a bit outlandish to me. But then again, if somebody had told you at the beginning of the year we're going to see $38 silver, we're going to see $3,500 gold, you would have said you're smoking something. And that's always the thing. It's you never know what's going to happen, and there's so many things going on at the moment. We've still got the Russia-Ukraine war. We've still got the Middle East conflicts going on. We've got America, well, doing what they're doing at the moment, and we don't know what's happening. There's so much potential conflict, or there's not potential conflict. There's so much uncertainty was the word I'm looking for. There's so much uncertainty going on at the moment all across the globe, geopolitical, monetary. It's. I mean, if we just look at what's happening in the world of gold, we see countries repatriating their gold. We see central banks buying gold. We see um, the government funds starting to invest in gold. It's so much happening, and there's so much potential for these metals to absolutely go skyrocket.
Yeah, it's quite interesting you talk about the states. I mean, it actually came through early this morning, where the Treasury Secretary Scott Bessent, I hope I've done his name justice there, has stunned the financial world by demanding an urgent internal review of the Federal Reserve, citing 400% expense surge since 2004, and accusing it of gain of function monetary policy and wasteful 2.5 billion headquarters spending. So again, we are in the season of tariffs, to be tariffed or not to be tariffed. The question is, but again, yeah, this is quite interesting. I think that's going to have quite an influence on gold. Again, it's the Fed is an independent institution within the states, and a lot of political parties throughout the decades has always tried to curb or have some form of influence into it, and it's always remained very independent, and it's part of the basis of it. So it's interesting that they're making these type of allegations. It's going to be interesting to see how that is then translated into an actual formal inquiry. Again, How does that translate? We know that the US debt to GDP ratio is over 130%. And as we've stated before, the market isn't looking good. The US market isn't looking great. The bond market's very slow, which has a direct reflection on the dollar. Hence, we're sitting with a dollar price of around 17 Rand 80 right now.
Definitely, we've been looking at the American economy, and the American dollar has been the reserve currency for so very, very long. And as we know, nothing lasts forever. And is this the start of the decline? I mean, if we just think back to 2020, if we think back to the COVID era, when, you know, surprise, surprise, Donald Trump was also in charge. And what they did was basically just print themselves out of trouble. There was $1,000 check cut to every citizen, and you can't hand out trillions of dollars because, I mean, think about it. They've got 600 and odd citizens. Obviously, not all of them would have gotten $1,000 check, but a great deal of that population did. And that is trillions and trillions of dollars that the government literally just gave away. You can't do something like that, even if you're the almighty US dollar. You can't do something like that and feel no repercussions. And maybe this is those repercussions finally starting to actually bite.
Well, that's quite interesting because you get nothing for nothing, and someone always eventually pays for it. And generally, within in constitution, countries where there's a constitution and it's democratic and so on, generally the person that does pay for it is the man in the street, the citizen who has to pay taxes. I mean, we've seen the debacle in this country with regards to revenue and lack of revenue that SARS is collecting. And that's also the same kind of thing. It definitely is a reflection on to the citizen that then has to fit the bill.
Well, that's usually the case, isn't it? I mean, um, if we look at these tariffs, we're talking about the tariffs and how it's going to impact South Africa. Um, while in the White House they're sitting saying, "Oh, well, we're going to collect all these tariffs," but where are they collecting it from? They're not actually collecting it from us. You know, they're collecting it from the buyer. The buyer pays those tariffs, and that price is just going to be passed on to the consumer. So it's essentially a tax on the American people. It's not that we're going to be paying the tariffs. The problem that we have and the issue why this is impacting us as a country is if we do have a 30% tariff or whatever it's going to be slapped onto any goods for coming from South Africa to the US, people are a lot less likely to pay that tariff and actually buy it. So there's going to be less exports, there's going to be less of a demand, and that's where the problem for South Africa comes in.
Yeah, and again, your more developed economies like China, they said, really, we'll just deal with someone else. And then the US came back and said, well, hold on a minute. Did we say a 30%? We actually meant, and again, it's that repositioning. And again, the developed economies or developing countries or nations are the ones that generally get hammered the hardest because we're so desperate for revenue. Where I was listening to another article about South Africa, where a couple of decades ago, we were the top economy on the continent. We're now literally coming in at third place, and even then, our position's not even that strong. And the difference is the other countries have been growing their economies. Ours has remained stagnant. So it's not that we've actually decreased in actual growth. It's just we're just not doing anything.
And it's, I mean, you hit the nail on the head there. We are stagnant. If you look at the figures that came in now, it's what, 0.05% growth? And that's the problem. It's not that we're doing badly, it's just that we're not going anywhere.
Yeah, and I did call that. It's quite interesting. I didn't see that article, but remember I was saying to you, I mean, we were already tinkering on a point percentage of growth, and I said we'd be lucky if we get anywhere near that, and it's actually been worse than expected. So yeah, I mean, the other thing I just wanted to touch on before we get onto the main part of our discussion is platinum again is been flying. It recorded another strong week. It's slightly down from the previous week, but again, it's sitting nice and strong in the high 13s, just under 1400. And again, what's quite interesting, and I was actually working on it yesterday, there's been quite an interest from an investment side on platinum. I'm talking about people wanting to buy platinum coins and so on. So that has been where, if we'd looked at it about a year ago, you couldn't sell platinum to anybody. No one wanted the stuff. And now suddenly there's this demand, and people are actually saying, can you supply platinum coins? And more so, it's not even for this country. There's an export opportunity here where people are saying, do you sell platinum coins? We'd like to buy them, and they're based in the US, based in Europe, and so on.
Yeah, we back to the old, the model of booms and busts here.
Yeah, if they'd known a year ago, they could have bought it at a great price, and here they're paying a premium.
Definitely. I mean, it's something we see all the time. As soon as the price starts climbing, people want in. But they usually get in on that mania phase where it's already a little bit too late. Yes, if you sell at the right time, you can still make your profit out of it. But generally, that's where people start losing money. If we look at something like Bitcoin, where you know it was climbing rapidly and people were pumping all their money in it, and then all of a sudden there was that dip, and people had bought sort of when it was near the peak, and then it was followed by a dip, because that's usually the way it goes. There's profit taking, there's a bit of a awakening, if I can call it that, that people realize, oh, okay, hang on, maybe this isn't all it's hyped up to be. It's like tulip bulbs back
In
in
Holland.
Holland, yeah.
Yes.
And there's this mania, there's this chasing after it. Oh, I can make money if I get in now. But usually by the point that the general population knows about it, that the man in the street is aware of this happening, it's too late. You need to get in on we call it the stealth phase, which is where your institutional investors sort of come in and start investing. And that's kind of where you need to be into the whole thing. And yeah, it's interesting that there's now suddenly, now that the price has already gone up, there's suddenly a demand for platinum.
Yeah, again, it's something to smile about, because we talk about this all the time, is look for the value. And sometimes where something doesn't seem to be going, we gave enough of a case, and maybe we need to redo that at some stage, is why is platinum so important? And we look industrially, we talk about hydrogen, it's directly linked to hydrogen. It is the best fuel, it's the best metal to basically convert hydrogen gas into actually electricity. And there's no other type of metal or material that even comes close to meeting platinum, and how it is benefiting that whole process.
Yeah, I mean, geez, we've been hyping platinum since 2020, I think.
Yes, well, in fact, I'll tell you exactly when it was. It was June of 2021 when I had a conversation, and at that stage, I'd experienced the being in the mining sector. 2008, platinum was booming, and suddenly just completely dropped. And I was actually, well, a lot of my clients were the platinum mining houses, and they went from having excess abundance to overnight literally retrenching and literally cutting back, because they were not even able to operate on certain levels. And what's interesting is, when I was given this conversation, this opportunity to talk to quite a knowledgeable man, we've actually done an interview with him before, old Bruce Williamson, where he's a PGM specialist. He does a lot of consulting to a number of different companies throughout the world. And I was given the opportunity where he said he'd like to chat to me about PGMs, and I was like, come and gone. And I remember we sat in our boardroom, and what I anticipated to be an hour meeting ended up being over a 5 hour meeting. And from that, I saw the real value of where platinum's going, its demand, and so on. And even then, I mean, that was way before even the hydrogen aspects of platinum came in. We're just talking about autocats at that stage, that is more efficient than palladium in the price. We're talking about the Russia issue with regards to pre-war of permafrost and so on. So there were a whole lot of things, because of course in PGMs, Russia has the biggest palladium deposits, and South Africa has the biggest platinum deposits.
Yeah, definitely. And It's very interesting that, we've been speaking about it for so long, and finally it's coming good. So I'm very happy about that. Um, you know, and it's just so interesting, all of these cycles that we're seeing. And I think we just at the beginning of a massive rally at the moment for all three metals. Gold, silver, platinum. I think there's still a lot of room for them to go up.
Yeah, and again, you 100% right. And this is where we poised. And again, what we want to do with this channel is to create information that is benefit. So just diving into this, and what is quite interesting is we know that when it comes to precious metal, especially that is accessible to the man in the street. So generally, you'd look at sovereign coins, that's your Krugerrands, your Britannias, your American Eagles, your koalas, and so on. Every country, or majority of a lot of the countries around the world, produce a sovereign coin. They normally do it in gold. They normally then do it in platinum and in silver, and they then do a yearly mint of that. They do a circulation type coin, and then they do a very high minted uh, proof coin. And to be honest, unless you wanted for the date of the coin to pay 400-500% difference on a proof versus a circulation is a complete and utter con. So just off the bat there, don't ever think that you're buying a proof half ounce Krugerrand and you pay the price of an ounce of a normal Krugerrand, that you're going to get big value when you try resell it at a later stage.
This, what we're always saying is, if it holds value to you, it doesn't necessarily hold value to anybody else. And when you come to the point where you're selling that Krugerrand, you know, it's usually because you need the money. And anybody buying it from you is going to take that Krugerrand, say, it's an ounce of gold. This is what an ounce of gold is worth minus our fees, etc., etc. This is what we're offering you. They're paying you for an ounce of gold. They're not going to pay you for a 2022 what do they call it, the shiny
Proof
proof.
coin,
That's
yeah,
it.
that's in a capsule that hasn't been physically touched. I mean, the story behind proofs, and to be honest, from a visual perspective, if you've ever seen a proof Krugerrand versus a circulation Krugerrand, yes, they're beautiful because they're extra shiny. They really are a wow factor. But, and this is your point.
Don't count on getting your money back because it's a proof coin. Count on you going to get the money for that 1 ounce of gold. It's as simple as that.
Okay, and that leads me on to our story today, because we did this in it was also probably around 2022, where we looked at this video, and we were actually sent the video. So basically in 2015, a guy by the name of Mark Dice, he's got a channel called Sound Money, and he produced a little snippet, a little video. We will post the links on it so you guys can have a look at it, because it's quite entertaining. But what we really took from it was the amount of, firstly, ignorance, and also where an old 10-ounce silver bar, which is thrown into a drawer and getting all scratched in that, has massive value, and it doesn't need to be super shiny and super clean. But at the end of the day, it's the value of its weight and what it actually holds. So let's unpack the story.
So basically, what happens is, Mark Dice goes about. He's got on one hand a stack of Hershey king size chocolate bars, and he's got on the other hand a 10-ounce silver bar. And he goes up to people in the street and he says, "Which would you rather have?" And without fail, people took the chocolate each and every time. And at the end of the day, he was still standing there with 10 ounces of silver in his hand. Now, what makes this so unbelievable is let's just take a look at some of the numbers here. Now, from our best estimates, 2015, when this video was shot, a Hershey's king size milk chocolate bar cost $1.39. Now, that's, as I said, that's our best research that I could get. At that stage, an ounce of silver was $14.74.
Okay, so let's just be clear on the numbers here. So you're saying an ounce of silver was a dollar, $14.
74.
Okay.
So that 10-ounce bar would have been
So we times that by 10, right?
Yeah, $147 round about there.
So $147 for a 10-ounce silver bar.
Correct.
And it's an old, dusty up, scratched bar. It wasn't a fancy, shiny one.
No, it was just a bar of silver, but tarnished. He actually
Yeah.
mentions it, the tarnished old silver bar. But still, it's 10 ounces of silver.
Yeah.
And that's the thing to remember. So, from there, we need to fast forward a bit. So those people took that $1.39 bar of chocolate over the 150 odd 10-ounce bar of silver. And it's quite funny because where he was standing, there's a pawn shop right on that corner.
Yes, you can actually see it in the even the cameraman. He kind of like cues it up. So old Mark's walking around with the handful of Hershey bars and then the silver bar, and he even says to the one woman, and she's like, "Oh, I'm a little bit cranky. Girls are cranky." And I remember women that we work with got so annoyed. It's like women are painted to be like this. It's like, well, that's what came out in the thing. But what was interesting is he showed the silver bar and he's like, we can even take it there to go and get it checked to see what it's worth. And then, oh no, just give me the bar. Too much of a hassle.
And yeah, it was very, very interesting because, he literally told them what to do with it. And they were standing there going, oh, but I don't know what to do with this. There's the
And it's the ignorance. And this is part of what we're really trying to drive here is people think like, what do you do with these coins? Is there value? And, oh, it's too much of a mission. I'd rather just take something that's quick and easy, instant gratification.
Yeah, but now let's look at the price of instant gratification here. In 2015, as we said, $1.39 for a Hershey's chocolate king size bar. Today it's $1.97, which is roughly 40% increase, I think, round about there.
Yeah.
So great value on money. 40% is not bad. If you kept it in your drawer, I don't think you'd want to eat it now, but
no, it would be of no value 10 years later. I think it would be a brick that's discolored and of no value.
yeah, I don't think it would be very tasty, to be honest. But anyway, so there's the thing, and the chocolate bar is long gone. However, bar of silver, let's say you threw it in your drawer, you forgot about it. You pull it out today, and now you're looking at where it was originally $14.74 per ounce.
So it was $147 for the bar.
So now today we're looking at it, and we're looking at $37.73 per ounce. So that is what, $177.30 for that 10-ounce bar.
300.
Yes, $377 for that 10-ounce bar. So now if we just look at the price increase from the original or from that day until now, we're looking at about 155.8% increase on the price of silver, on an ounce of silver in terms of dollars.
Yeah, and I think the really important thing here, and we always go on about this, but again, it's people buy today and they think, oh, you know what, I'll sell tomorrow. And literally we get this all the time where people bring, because the thing is it's a liquid asset, and they in a bit of financial difficulty. It's easy to go and just grab that and then just get, because it will help the immediate problem. But the truth is, we know that if you, like you said, that silver bar sat in a drawer since 2015, went from $147 for the 10-ounce bar to $377 for the same bar. It's grown in value exponentially over that period of time.
And here's the thing, we've been talking dollars so far. We've been talking in dollar terms. Now let's bring it back home. Let's look at rands.
Okay.
So that 10-ounce bar in July 2015 would have been worth 1,835 rands.
Sure.
And that was, the dollar was 12 rand 45. So, it's a while back, but it's not that long ago. Now we're looking at it, and we're looking at a rand to dollar of about 17 rand 84, I think was the latest price I saw today.
Yeah.
And we're looking at that bar of silver, that 10-ounce bar of silver, which is now worth 6,728 rand, which is 267% increase. And that's the part that we're trying to get people to understand. That's what we're trying to convey here is, it's not about making your quick buck here and there. It's not about buying and selling and trading like, you're trading stocks or something. It's about preserving that wealth. It's about negating that currency devaluation. I mean, we're talking $12 or 12 Rand 45 dollar in 2015 versus 17 Rand 84 now 10 years later.
And yes, the rand has strengthened to the dollar over the short period, but we know trend-wise it does lose value. We know that we due for a whole lot of things that are coming up. The FIC rating is going to be reviewed in the next coming months. We know that as far as our revenue is completely down, our growth is literally stagnant. So the likelihood of the dollar being strengthened further are all short-term gains. We know that it will go back to 18. We'll know it will go back to 19 and probably break that 20 Rand barrier. And once it does, and I've always said this, we'll see it jump up to 25 quite quickly.
And that's also the one thing we always talk about is the risk of currency devaluation. We've spoken about this at length. I mean, one of the popular examples we use is Argentina. As we know, 2020 they suffered a sovereign default,
Yeah.
and since then it's hasn't gotten any better. If we look at January 1st, 2020, the Argentine peso was $59.76 to the dollar.
Yeah.
If we look at it today, it's sitting at 1,339.25 pesos to the dollar. That is absolutely crazy. It means that it's got 4.46% of the original value that it had in 2020. Now, the scary thing is this devaluation happened over the course of 5 years. Obviously it had that big push from the sovereign default, but if you think about it, everything you own, all of your money in the bank, all of the shares you have in local companies, everything you've got on the local stock market has been reduced to 4% of its value. Imagine what that will do to your actual wealth. And this is the problem that we're facing. If we look at it, we've got this little exercise that we do, that if you took 1,000,000 pesos and you bought gold, etc., etc., what would it be worth now? So right now, if you were to go and buy gold with 1,000,000 pesos, you'd get 0.22 of a gram.
Yeah, I was gonna say you won't even get a tenth of an ounce.
While if you'd bought in 2020, you would have bought 11 ounces.
And what 11 ounces is worth now?
And that's the thing. Right now, 11 ounces is worth 49 million pesos.
Yeah. That well, we need not say anymore. We can actually close the show. Good night. Bye. Cheers. Done.
See, but that's the thing. We always talking about the gold getting more expensive. But if you really think about it, it's not gold that's getting more expensive, because everything is getting more expensive. It's actually the money that's getting worth less and less and less. And that's if you look at the or gold price in dollar versus you look at the gold price in rand, there's going to be fluctuation. So and that's an interesting thing I thought about this morning in the shower, to the shower thoughts, that you could actually, if you just hit it at the wrong time, you could actually hear that the gold price is going down. The gold price is down. You see it in dollar terms. There it is. It's gone down. I go and buy my ounce of gold, and you could have ended up paying more for that ounce of gold than you would have paid when the gold price was actually higher. And that's the interesting thing, or my shower thought for today. And it's just because, yesterday the rand to the dollar might have been 18 Rand something, and today it's 17 Rand something. Or tomorrow it's going to be 18 or 19, and you're going to end up paying more. So even if that gold price comes down, you might end up paying more because of that rand dollar fluctuations. And that is the whole thing behind this. We're trying to negate those fluctuations, that decline of purchasing power. And if you really look at it, has gold really gone up, or has money just gone down?
Well, I think it's a combination of both, but I find it quite interesting because in that period of mid 2020, where the rand was being challenged and it had jumped up quite high. I think it was around 19, and then was pullback. There were pullbacks, but I remember seeing the price of gold in rands and then in dollars, and the difference straight away. You know that there's, and even though there was times where the gold price was falling, you know, you could see that it was the rand that was actually holding it up because of its strength to the dollar, and so on. So again, spot on there. And you know what's quite interesting is, and back to the whole Hershey thing, is out of all the people he interviewed, not one of them took the silver bar.
Yeah, that's the sad thing, you know. He was left standing there with a silver bar in his hand at
And
the
a
end of the
whole lot
day.
of chocolates that were in a cooler box, and he gave them all out, and that's all that people wanted.
And it just comes down to people not actually knowing what a bar of silver is worth. You know, if you're listening to shows like these, you'll know what it's worth. But just average man on the street, I mean, geez, take me. Let's go 10 years ago. Okay, I knew what gold and silver was worth, so maybe I'm a bad example. But there's so many people who, I mean, today I've got some friends who I talk to about what I'm doing, and then they asking me, but how do you make money from it? And they have no clue what
Yeah.
metals are actually worth. And that's the thing. It's just the empowering people to know what that there are alternatives.
Yeah.
It doesn't need to be stocks, and you don't need to have 60, 70,000 rand in your pocket to buy an ounce of gold. You
Yeah.
know, there's silver, there's smaller denominations, there's other options. The thing is, it's getting people to understand that you actually need to get your money out of this fiat currencies, because it's fluctuating. It's doing stronger at the moment, but we're looking 10 years, 2015 to now, 12 rand 45. Now it's sitting at 7 rand 84, and it's strong at the moment.
Yeah.
And that's the currency devaluation that we're talking about.
Well, what's interesting, I was also reading another article by old Ray Dalio, who also owns one of the biggest funds in the world, and he has come out saying that in your portfolio you need to allocate at least a minimum of 15% of your portfolio should be allocated into gold or cryptos. And it's quite interesting. I mean, he was never crazy about gold to start with, and I've been following old Ray for many, many years. Quite an interesting guy. He's written a number of books. He's also come out with business principles, and really, really great guy to actually listen. And you can see that a lot of what he applies himself to, there's a lot of thought behind it. He does foresee that there is going to be some market correction in the form of a market reset or a crash of some sort. And he's not the only one, but they are guarding against the red flags that the American economy is just showing off or flashing right now. And for him to be coming out and saying allocate a minimum of 15% of your portfolio into gold or cryptos, again, that to me is, it just reinforces what we talk about. I always say to you, pay attention to what the big boys doing. What are reserve banks doing? What are they buying? They're not buying bonds. They're not buying cash. They're buying gold. And they've been buying gold over the last, 72 months at an unprecedented level.
Yeah, we've seen especially China adding tons and tons of gold to their reserves. We've seen central banks all over the world adding to the reserves, and I think I mentioned it earlier. Countries are repatriating their gold. They're
Yes.
saying, "Thank you for holding it, but we want it back now."
Yeah.
So yeah, it tells you quite a few things, but the most important thing I think is it tells you that there is trust in gold.
Yeah.
That they see that gold as that safe haven.
And again, I think that has been reinforced by Basel III, with the reclassification of gold from a tier 3 asset to a tier 1 asset. I mean, to me, that is probably one of the most defining things that anyone, those friends like you spoke of that were not sure of gold or how does you make money from gold, it's it's now a tier one asset. So the financial world, which for decades upon decades pushed against gold, saying that it's not a real asset, it's this and that. We know that as far as global currencies, it's only second to the dollar, being utilized as a form of exchange.
Yeah, it's actually surpassed the euro.
Yes.
And that is absolutely insane. But it's not just a reclassification that cements its position, it's history. I mean, you just spoke about them saying have crypto and gold in your portfolio, but crypto hasn't been tested like that. What happens when things really go bad? What happens when there's a stock market crash, like in way back when stockbrokers jumped from the windows and the like? What happens if there's a war and these typical wartime scenes that you see in the movies? What happens to crypto then? We don't know.
Even more poignant, what happens if the lights go out? How do you access your Bitcoin? Click, click, click. I can't get my Bitcoin, but it's there.
Well, I mean, we're talking total doomsday scenarios in that one. I'm not saying it's impossible.
Yeah, listen, we've spoken about this before. We've had some very interesting clients through the years where some are proper preppers. And I mean, we think it happens in the States. There are people in this country that are prepping for a complete collapse of normal society, that will be going down to a bartering system where you'll give them a bit of gold for a bit of bread and so on. I mean, I've had clients take kilogram silver bars, like 100 of them, and plant them in their garden all over.
Well, I mean, look, I'm not going to say it's impossible, but I find it highly, highly unlikely.
Yeah, again, I think, and we've always taken a stance on this channel that we're not here to be forwarding an agenda. We try to remain as apolitical as possible. And I mean, we got very passionate subscribers that will tell us, what's happening with this and that party and this and that. And again, we see everything, and we know that, but we also choose to try be as neutral as possible, so we're not pushing an agenda. And I think that's important because it shows that we prepare to see both sides, but we're also not blind to it either.
Definitely, and you can't be blind to it. You have to look what's happening. You have to recognize when things are going bad, where things are going bad, why it's going bad, and act accordingly.
Willem, in closing, anything else?
You know what, Dion? Just the usual disclaimer, I think. We are not financial advisors. So, do your own research, do your own due diligence before undertaking any investing activities. It's as simple as that. Be sensible with your investing.
Yeah, and again, I think what we've put out today has been quite interesting. And again, it's reinforced by the research that we do. And again, we are not financial advisors. We do a lot of research to make sure that what we say to you is 100% accurate, or as accurate as we can deliver it.
Very much so.
Thanks a lot and take care. See you soon. Bye.